at DLL, we're pretty close with some manufacturers through our vendor programs, and we're in there with them every day, fighting, just trying to figure out custom or tailored solutions that can still enable that sale and get the customer in a piece of equipment where they're comfortable, at the monthly payment level.
Welcome back to ACS Portfolio Perspective. I'm your host, Andrew Pace, Chief Client Experience Officer at ACS, joined today by Nick Kasha, ASA Equipment Manager at DLL. With his accredited senior appraiser designation from the American Society of Appraisers and over 13 years in asset management, Nick leads equipment management operations across the Americas for DLL, one of the world's largest equipment finance companies with over $47 billion in managed assets. His territory spans the United States, Canada, Brazil, Mexico, and Chile, giving him unique insights into international equipment markets. Nick specializes in residual risk analysis, end-of-lease operations, remarketing, and equipment valuations across diverse categories, including construction, agriculture, transportation, and industrial equipment. At DLL, he's also been involved in implementing AI solutions to enhance asset management efficiency and accuracy. He is also on the LFA Equipment Managers Conference Planning Committee. Nick, welcome to the show.
Thanks, Andrew. Thanks for having me. Happy to be here.
I'm really glad you could join us. Your experience across such a wide geographic and asset range gives you a rare perspective in this industry. And I've been looking forward to unpacking that and hearing your thoughts on where asset management is heading. Let's start with something that's top of mind for a lot of our listeners, the role of AI in asset management. It's a space evolving quickly, and I know DLL has been ahead of the curve. How is DLL currently using AI for equipment valuation and internal data analysis?
Yeah, so at DLL, we're all in using AI to supercharge business value for our team, our partners, our customers. We've got this AI committee that's knee deep in a bunch of existing projects, since this stuff's a big competitive edge for us. But let me tell you, in asset management, AI is seriously stepping up its game. It's like a superpower for pulling together and analyzing data faster and smarter than ever, which is enormous for us delivering revalue to our customers. When it comes to data modeling, it's practically made for it. It's an absolute slam dunk.
Can you walk us through a real example, maybe supply cost analysis or internal search, where AI has made a measurable difference, especially in asset management?
Yeah, so it's made a ton of difference for us. AI can be used to gather data faster, gather it more accurately, more efficiently. You can then turn it around and use it for modeling. So, that's the bread and butter of AI, and we're really excited for what that can do for all asset managers in the industry, and just really superpower that analysis, which will in turn deliver real value to the customers.
So what security protocols or considerations have you put in place when introducing AI tools into your operation, Nick?
Yeah, so another great question, Andrew. Security, super important. Customer information, internal company information. You really need to make sure you're protecting that through whatever agent you're using, working with your IT and your IT security folks on your teams to really make sure that everything's very tight, because you certainly, don't want that information to get out there.
Of course. And what would you say are some of the time-saving benefits that have stood out most in your day-to-day processes?
Yeah, so the time-saving benefits are great for us. It's a lot. It's allowed us to get to things that we normally wouldn't be able to get to. And some of those time-saving AI aspects is the utility Copilot, the one we use here at DLL. It's hooked up to Excel, Word, PowerPoint, Outlook. We've been really able to leverage that, whether it's email summarization or the AI can take notes on a meeting, assign action items, help you with a follow-up schedule, a project plan. It's been an immense time saver for us.
What about trying to find time in everybody's calendar to schedule a meeting? I know we use AI just to try to find a good time that everybody's available so we can meet, right?
Yeah, that's a great idea. I didn't even think about that one. Maybe that's something we'll try here at DLL. That's a good one.
Yeah, I mean it's definitely made it's definitely saved a lot of emails back and forth trying to figure out when people are available. So that's been a great asset for us and a great tool for us to use. Um, for other companies in collections or recovery thinking about AI, where where would be a good place for them to start, and what pitfalls should they avoid?
I think just figuring out what you want out of the agent. I think writing prompts, like how you're asking it questions. That's what we found. We have a prompt library, for example, where you can go in and look at what other prompts people have entered to get information out of the AI. I think seeing how those work, you can watch videos on YouTube. Um, Focusing on writing the prompt and being specific that you're getting exactly what you need so that you don't have to then continue to conversate with the AI or the agent.
No, that's great advice. Prompting is critical. Let's shift gears from AI to something that's affecting everyone in the space: equipment values and the dynamics of the secondary market. How would you describe the current state of the used equipment market, especially around inventory flow?
Yeah, so the market's dynamic. It's changing every single day. Every day in the news, we're reading things and considering how they're going to affect our business. Whether it was COVID, whether then it was supply chain. Now that supply chains eased and manufacturing picked up, now dealer inventories are full. How that's affecting the used equipment markets. Interest rates. When are interest rates going to get lowered? How's that going to affect folks buying behaviors? So there's just a lot going on, and we're just trying to kind of stay ahead of it as best we can. Um, from an inventory perspective, getting down to some specific asset classes, I think everybody would agree the transportation market has definitely softened over the past 6, 12, even 18 months. So that's put a lot of pressure on some portfolios out in the market.
So, Nick, what else could be impacting dealer inventory?
Yeah, so the trade deals and the tariffs surely is affecting whether those dealers want to invest in new equipment now, whether they want to wait, what kind of equipment they currently have sitting on their yard that they're trying to sell through. It's going to make it very difficult for dealers out there to forecast the next 6 to 12 months for sure.
And you know, what would are there any still lingering effects from COVID on equipment valuations today?
Yeah, good question. So there's the lingering effects on from COVID is that a lot of those assets that were sold at very high prices due to supply chain and increased costs, those could still be out there in dealer inventories. So they actually haven't sold them through to the retail end market yet. So the stuff they bought a year later may be a little bit cheaper. So they sold that sooner than they've sold the assets, they bought previously at the higher COVID price. So that's definitely going to be something to watch, how the dealers get rid of those assets.
Well, I mean that's interesting, and as repossessions rise, what should lenders be doing to stay ahead of potential exposure?
Yeah, so on repossessions, some of the things we've read about, some of the things we're hearing, GPS tracking, telematics, how does that kind of play a role? I think that's going to be at the forefront moving forward. Can you get a GPS magnet put on every asset you're financing, or can you activate telematics? There's also the privacy concerns. I know we talk about that here at DLL, and how that affects things. So definitely work with your legal and recovery folks, but also your legal folks, because there's a lot of issues there.
Yeah, contract language. I mean, if you're going to put a aftermarket device, I'm sure you have to make sure that that language is written into the customer contract. Can you unpack the pricing pressure coming from manufacturers and how that's squeezing both dealers and lenders?
Yeah, I mean, listen. I think that's a hard one to unpack. I think it's mixed. I think manufacturers are eating price increases where they can. Dealers are eating it where they can. Some are not eating any and passing on to the customer. I think it's very mixed. at DLL, we're pretty close with some manufacturers through our vendor programs, and we're in there with them every day, fighting, just trying to figure out custom or tailored solutions that can still enable that sale and get the customer into a piece of equipment where they're comfortable, at the monthly payment level.
Sure. And when you approach valuations, do you lean more towards percentage based or dollar based calculations? And how, does that shape risk tolerance?
Yeah. So the math behind that, right? The percentage-based lenders tie it to variable cost being financed. This can provide predictability, right? But it exposes you to market drops similar to what we're experiencing, you know, after the decline of the COVID environment. So where prices had risen significantly. So that's certainly a risk. For dollar amounts, values are fixed, so they don't account for increases like during COVID, but then they also don't account for inflation, technological obsolescence, things like that. So there's an upside and a downside to both. I think most asset managers are agile. They use some combination of both, depending on what situation they're in or what type of relationship they have with a vendor, a manufacturer, a dealer, whoever. So I think the answer could be both.
That's great. Thank you. Let's dive into something that really sets DLL apart, your global reach. Let's talk about international remarketing changes the game. What are the biggest advantages you see having a global footprint when it comes to asset disposition?
Yeah, so DLL operates in 25 countries. So of course there's opportunities for cross-border collaboration. The real value for us is getting the different perspectives from those other countries that we can then bring to the U.S. and tailor kind of to our needs. We've had some success with that. It is amazing how similar the different global used markets are, but it's also amazing how very different they are, how they could be micro regional, for example, where an area of a country is strong in something, but another area in that same country 50 miles away is not even close to as strong. So we've kind of learned a lot, I guess, is the best way to say, and then tried to implement locally.
Great. And out of those 25 countries, how many of them have you personally visited?
Three.
Okay.
Yeah.
So U.S. and which other two?
U.S., Canada, and Germany.
Okay.
But personally, and in other jobs, I've visited many more, and what I can definitely tell you is seeing it is different than hearing it, and getting the experience. Just see how other customers, dealers, vendors interact in different market environments. It's life changing.
Oh, that's great. So, looking ahead, there are some major shifts happening across the industry from energy transitions to political headwinds. The risk landscape is ever changing. How do you see alternative power sources like EVs and even hydrogen changing asset values and demand?
Yeah, so power, great topic, in the news every day, transcends this conversation, the industry we're in. The world needs more power. That much is clear. I think everybody can agree with that. I think at DLL, power creation, alternative power creation, sustainability, it's a long-term business strategy for us. That's pretty clear. So we're all in on that. We have an energy transition team that we've set up. We're looking at all kinds of opportunities for that alternative power.
Are you seeing political or regulatory uncertainty start to weigh on valuations or business confidence?
Yeah, of course. It's an ever-changing environment, right? There's new legislation coming out, seems like every week, or executive orders. There's rollbacks of some things that some folks may be counting on. So those are all starting to sunset or just go away completely, whether it's the investment tax credit or whatever other EV regulated mandates. So yeah, something to be aware of. Definitely going to change customer behaviors, purchasing decisions. So it's even more critical for finance companies to be able to offer some kind of solution, some kind of sustainable solution to overcome those hurdles.
And you've talked about a few times that DLL has a strong focus on sustainability. How does that intersect with market performance or asset selection?
Yeah, so central to our approach with that is balancing the risk, the reward, and the sustainability, right? So financial performance is usually essential, but it must not come at the expense of sound management, compliance, environmental, and social responsibility. Um, so with sustainability fully integrated into our strategy, we're committed to being that transition choice for those partners. So we kind of look at it all together as kind of one story.
That's great. What are you seeing in terms of new business volumes or vendor finance programs heading into 2026?
Yeah, so we're positive, and we're feeling pretty good about it. Our sustainability strategy, it's built on the belief that finance can be a powerful force for good. So we're definitely aligning our goals and our own sustainable practices, um, to help our partners, our customers, and the communities transition towards more of a sustainable future together.
That's great. And finally, how do you see the relationship evolving between asset managers and firms like ACS in the broader ecosystem?
Yeah, so third parties are critical to our efficiency, our execution, our results. We rely on third parties like ACS for everything from door knocks to collections to reselling equipment, appraising equipment, repossessing equipment. We value those partnerships. They bring us a ton of value with the results they provide us, and they also free us up to do other things. It's some of the non-value added work that it's just better for them to do it, so we could focus more on the value added work. So Andy, earlier we talked about increased repossessions and those kinds of things. I mean, what advice could you give to us as asset managers or lenders on how to better manage this increase that we're seeing, and what things would you recommend?
Given the current increase in repossessions, our best advice to asset managers is to shift from, more of a reactive to a proactive strategy, just based on some of ACS methods and in market experience. Some of the recommendations, identify problem accounts earlier. Don't wait till charge off. Use early stage collection efforts and behavioral triggers, missed payments, broken promises, communication gaps, to possibly flag some of those at-risk accounts for intervention sooner. Pre-repo outreach is key. Implement a pre-repossession communication strategy. Clients have seen higher voluntary surrender rates and reduced skip fees when borrowers are engaged earlier and given options. You can use data to prioritize recovery, apply some risk scoring models, portfolio analytics, to focus on units with some of the highest chance of recovery or resale value. You can leverage remarketing channels earlier. Obviously, making sure you have clean titles and documentation. Some of the repos we run into some issues. It can delay some of those recoveries when paperwork is either missing. There's issues with titles and things like that. One of the other things, try not to let emotion or hope cloud judgment when a customer stops communicating, or shows intent to hide or damage collateral. It's time to act. Sometimes delaying decisions rarely yield better results. It only costs more money because when they're not paying, your equipment's depreciating. And then use trusted recovery partners. Not all agents are equal, and partner with firms that understand commercial assets, state-specific laws, and how to protect your brand while securing the asset.
Earlier, we were talking about AI. How's that going in your world? Is there anything that you're using it for on the repossessions, collections, recovery side?
So we're using it to help create some efficiencies internally, so that our staff and our team has more time to focus on what they're great at, which is skip tracing, interacting with customers, and finding equipment. There's VIN and plate matching automation, predictive modeling, communication strategy. We talked about, dashboard and scorecard integration. We use AI to build custom built dashboards and scorecards that clients are going to be able to see how we're performing. And these tools are real-time visibility into portfolio performance, activity, recovery timelines, really empowering our clients to make informed decisions. And, again, at the end of the day, it's something that we have to, be careful with. And, we have to have, very strict policies internally, and, use it for internal purposes. And, we have a great team here that monitors the usage of AI. But it's here, like it or not, and we're trying to utilize it in a way that's going to help us be a better provider to service provider to our clients. So that's how we see it. There's telematics and GPS and things like that. You still need people to recover assets. So it's really what you can do behind the scenes that are going to make you a more effective service provider to your clients.
Thank you.
You're welcome. Nick, this was awesome. I really appreciate you stopping by. Your perspective on the global asset landscape, AI, the secondary market is something a lot of folks in our space need to hear. Thanks again for carving out the time, especially with everything you're managing across multiple continents. To everybody listening, thanks for joining us on ACS Portfolio Perspective. If you enjoyed today's episode, hit that subscribe button and stay tuned. We got more great conversations coming your way from leaders shaping the future of equipment finance and recovery. Take care, and we'll catch you next time.